Hey everyone, welcome back to the channel. Today, we're diving into a topic that could save you a serious amount of money over the life of your home loan. Mortgage refinancing. It might sound complex, but I promise, by the end of this video, you'll understand exactly what it is, how it works, and whether it's the right move for you. So, what is refinancing? In the simplest terms, it's replacing your current mortgage with a new one. The new loan pays off the old one, and you start making payments on the new loan instead. The big question is, why would anyone want to do that? The number one reason is to take advantage of lower interest rates. Let's imagine you bought your home a few years ago when interest rates were, say, at 6%. Now, let's say rates have dropped to 4%. By refinancing, you could potentially secure that lower 4% rate for the remainder of your loan term. This might not sound like a huge difference, but over 15, 20, or 30 years, a 2% reduction can translate into tens of thousands of dollars in savings. Your monthly payment could drop significantly, freeing up cash for other goals, like investing, paying off other debts, or finally, taking that dream vacation. Or you could keep your payment the same and pay off your mortgage years earlier. The process of refinancing is pretty similar to when you first got your mortgage. You'll need to apply with a lender, which could be your current one or a completely new one. It is always a good idea to shop around and compare offers from at least 3 different lenders to ensure you're getting the absolute best deal. They'll look at your credit score, your income, your existing debt, and the current value of your home. A higher credit score and a good amount of equity in your home will generally help you qualify for the best rates. Once you're approved, you'll go through an underwriting process, which involves an appraisal to determine your home's current market value. This is a crucial step because lenders want to make sure the loan they're giving you is backed by a valuable asset. If your home's value has increased since you bought it, that's great news. It means you have more equity, which strengthens your application. From then on, you'll make your monthly payments to your new lender at your new, lower interest rate. So, when is the best time to consider refinancing? The most obvious trigger is a significant drop in market interest rates. A general rule of thumb many people follow is that if you can lower your rate by at least 1%, refinancing is worth looking into. However, even a 0.5% drop can be beneficial, especially on a large loan balance. It's all about running the numbers. Another great time to refinance is if your financial situation has improved. Maybe you've gotten a raise, or your credit score has jumped up significantly. A better credit score can make you eligible for much better rates than you qualified for initially. Then there's the cash out refinance. This is where you take out a new mortgage for more than what you owe on your current one and receive the difference in cash. Of course, refinancing isn't free. There are closing costs involved, just like when you first bought your home. These can include application fees, appraisal fees, title insurance, and other charges. Some lenders offer what's called a no-cost refinance. This sounds tempting, but it's a bit of a misnomer. The lender isn't just waiving the fees out of the goodness of their heart. Usually, they'll either roll the closing costs into your new loan balance, meaning you'll pay interest on them, or they'll give you a slightly higher interest rate to cover the costs over time. This can be a good option if you don't have the cash on hand for closing costs, but be aware that you're still paying for them one way or another. Always ask for a detailed breakdown of fees and compare a no-cost option with a traditional one to see which is truly better for your situation in the long run. Another thing to consider is the type of interest rate. If you have an adjustable rate mortgage, or ARM, where the rate can change over time, refinancing into a fixed rate mortgage can provide stability and peace of mind. You'll lock in a rate that won't change, so you will know exactly what your principal and interest payment will be for the entire life of the loan. This is especially smart if you expect interest rates to rise in the future. On the flip side, if you're in a fixed rate loan and don't plan to stay in the home for long, a new ARM with a low introductory rate for a few years might save you money in the short term. So, how do you get started? The first step is to check your credit score and get a copy of your credit report. Make sure everything is accurate and dispute any errors. A higher score means a lower rate. Next, figure out how much equity you have in your home. You can get a rough estimate by looking at recent sales of similar homes in your neighborhood. Then, it's time to shop around. Contact multiple lenders, banks, credit unions, and mortgage brokers and get a loan estimate from each. This is a standardized form that makes it easy to compare offers, side by side, looking at the interest rate, APR, and closing costs. Don't be afraid to negotiate with lenders. Let them know you're talking to their competitors. They might be willing to match or beat another offer to win your business. To wrap things up, refinancing can be an incredibly powerful financial tool when used correctly. It can lower your monthly payments, help you pay off your home faster, and give you access to cash for other important life goals. The key is to do your homework. Understand the costs, calculate your break-even point, and make sure the new loan aligns with your long-term financial plan. Don't just focus on the lower monthly payment. Look at the big picture of total interest paid over the life of the loan. Refinancing is a big decision, so take your time, ask lots of questions, and choose the option that makes the most sense for you and your family. I hope this detailed breakdown has demystified the world of mortgage refinancing for you. It's all about taking control of your biggest debt and making it work better for you. If you found this video helpful, please give it a thumbs up and consider subscribing for more content on personal finance and building wealth. If you have any questions or your own refinancing stories, drop them in the comments below. I love hearing from you all. Thanks for watching, and I'll see you in the next video.